The TSX Composite Index was up 149.79 points, or 0.72%, to close today's market session at 20,906.52. The market session on Friday was like a rising tide that lifts all boats. The market was broad-based positive today. 8 of the 10 TSX major sectors were up. Technology, with 1.8% gain, lead the sectors. Financials gained 1.27%. Utilities gained 0.91%. Healthcare gained 0.88%, and industrials gained 0.45%. Basic materials gained 0.1%. Energy, down -0.03%, and durable consumer goods and services, down -0.23%, were the worst performing sectors. Electrical components and equipment, up a solid 6.36%, was the top performing industry on the TSX at the market session Friday. Real estate operators was up 4.33%. Coal was up 3.67%. Medical equipment, supplies and distribution was up 3.06%, and reinsurance gained 2.93%. If you have been following our stock market reports, you might have noticed that the coal industry has been doing relatively well the last several sessions, in spite of all the talk about renewable energy sources becoming dominant. The problem is that the reality is yet still far from those talks. Coal and fossil fuels are not disappearing anytime soon. In any case, as an investor, your goal is to make money. Note that most of the coal industry stocks are penny stocks, so beware. Here are some of the companies belonging to the TSX's coal industry group, in case you wish to do further research for your investment planning: KNAF Investment Incorporation, Colonial Coal International Corporation, Maureen Resources Corporation, and South Gobi Resources Limited.
The Dow Jones Industrial Average advanced 395.19 points, or 1.05%, to close at 37,863.8. The Standard & Poor's 500 gained 58.87 points, or 1.23%, to close at 4,839.81. The Nasdaq Composite advanced 255.32 points, or 1.7%, to close at 15,310.97. It was a buoyant market session with the big technology giants making big gains. The market, for now, is ignoring all the negatives while focusing mainly on the positives. Traders will cross the other bridge when they get to it. Today was a day to care less why the market is making gains as long as gains are being made. The US market was broad-based positive on Friday. In fact, it was a very buoyant market indeed. 8 of the US market's major sectors ended the session with gains. Utilities, down -0.02%, and durable consumer goods and services, down -0.39%, were the only two to end the session in red. Technology, up a healthy 2.07%, was the top performing sector. Financials, up 1.42%, had a good session. Industrials was up 0.84%. Basic materials was up 0.16%. Energy was up 0.13%, and healthcare was up 0.08%. Computer hardware industry was up 5.53%. Semiconductors was up a respectable 3.94%. Semiconductor equipment and testing was up 3.3%. Advertising marketing was up 2.8%, while aluminum gained 2.52%.
For the week, only 3 sectors ended in green, reflecting market volatility earlier this week. Technology, up 3.93%, was the top performing sector. Telecommunications was up 1.69% for the week. Industrials was up 0.37%. Utilities declined 2.98%. Basic materials declined 2.08%. Energy was down -1.93%. Healthcare was down -1.18%. And financials was down -0.24%. The market outlook has changed to trade, but with caution. The 10-year yield was up 20 basis points to 4.15%, clearing the 200-day line. In late December, the 10-year Treasury yield was trending down, which spurred the current market rally. Now that the 10-year yield is climbing back and well over the 4% mark, the market rally may become tenuous. The 2-year yield was up 27 basis points to 4.41%. The 2-year yield is closely related and closer to the real current interest from the Feds.
Friday's market was driven by corporate earnings reports largely spearheaded by technology companies. Technology within TSX is heavily weighted by Shopify. Celestica Incorporation and Shopify Incorporation were noteworthy performers on Friday. Shopify did not deliver earnings report this week. The stock was up Friday, adding to impressive gains in the last 2 months. Celestica Incorporation has currently scheduled to deliver earnings report on January the 30th. Supermicro Computer Incorporation was the outsized performer on Friday. SMCI stock gained 36% after the company reported that it expects fiscal second quarter adjusted earnings of $5.40 to $5.55 a share, higher than analysts' estimates of $4.51. It expects sales of $3.6 billion to $3.65 billion. Supermicro Computer Incorporation manufactures rack-mounted servers, some of which are purpose-driven to support heavy AI-driven computation.